My name is Alt Brandt. I'm the CEO of Wynnstay PLC, and I'm delighted to present my first set of results since joining the company in October 2024. My experience has been in agriculture for the last 3 decades. Grew up in South Africa in an agricultural home. Have been in the UK for the last 23 years in the role of CEO of a global business. First impressions is an amazing company. Wynnstay is 107 years old, incredible history, a team of people which is really proud to be part of this business, wonderful customers and a very strong board, and so much potential, and that is so exciting for all of us. Wynnstay is a British agricultural supply business. Started in Wales many years ago, but today operate from Scotland in the north to Cornwall in the south. Our business is a focused business on British farmers, supplying them both in the livestock as well as the arable industry with products which we manufacture ourselves, but also buy in and sell through our advanced depot network.
It's been a challenging year for Wynnstay, and our results aren't where we want them to be. This is a combination of some adverse weather and market conditions, but also some underperformance in parts of the business. Our revenue is significantly impacted by commodity prices, which continued to deflate during the year. Year-on-year revenue reduced to 613 million. 96% of the reduction was commodity driven. The remaining 4%, or 5 million, was resulting from lower activity, and that was predominantly in our feed and grain business. Gross profit is a much better reflection of our underlying trading. This was 1% lower at 79.2 million. Improved fertilizer volume relative to a suppressed 2023 was offset by feed and grain volume shortfalls. Depot merchanting activity was flat, but margin per transaction improved to mitigate certain inflationary cost increases in this part of the business. Adjusted PBT of 7.6 million was 2.7 million lower than in 2023 and reflected the reduction in gross profit and also some inflationary cost increases, notably in labour and power. Exceptional costs of 2.3 million were incurred in relation to business restructuring as we made changes to our leadership team and also closed our manufacturing facility at Twyford. As reported at the half year, we no longer plan to redevelop the Cairn site as a multi-species feed mill and expect to sell the site in spring. This resulted in a write-down to its carrying value. Going forward, poultry feed will be manufactured at our Lance & Fried mill and via third parties. We have a progressive dividend policy and we've increased the dividend each year for the last 21 years. We've got significant cash resources and retained earnings, so we're very comfortable maintaining that policy. We have a very strong balance sheet underpinned by tangible assets. We've also generated strong operational cash flows this year. At the end of October, our net cash position pre-leases was 32.8 million. That's 6.9 million higher than in 2023. Year-on-year commodity deflation has improved our working capital and generated 7 million of improved cash flow. As a reminder, our working capital benefits when commodity prices reduce. That's because the relative amounts of cash we have to invest in stock and debtors are less year to year when prices fall. October does represent the lowest level of working capital requirement in our annual cycle and the highest reported cash position. However, we have sufficient funds to meet all our working capital requirements as well as what we need to invest in the business to develop it going forward and to continue paying our dividend. During 2024, we've continued to invest in all parts of the group. We completed a second round of investment of solar arrays, which provides significant low-cost renewable energy to our sites and provide a return on capital of around 20%. We've expanded our fertilizer business to include a new site in Bristol, which will add capacity and geographical expansion to our blending operations. This facility will be operational in spring 2025. with benefits expected to our earnings in financial year 2026. We have approved plans to increase manufacturing capacity across our anchor sites at Carmarthen, Llansantffraid and Tamar in Cornwall. This will add around 40% additional manufacturing capacity by the end of financial year 2026, which will support our sales growth in core livestock areas in South Wales, South West England and in North Wales.
Project Genesis will make us leaner, flatter, fitter and more responsive for all the future challenges which we all experience daily in our industry. It will make us more focused because we will be a total integrated business on the one Wynnstay platform. The way we will do it is currently in a design phase, which will have 2 years of execution, where we will focus on even the most minute details of bottlenecks, costs, duplication, and areas which we could expand in terms of our focus. And the sum total of that will make Wynnstay a more profitable business, a business which our customers are keen to support and which will give our shareholders strong returns. We expect the benefits to start flowing through already from this financial year. The real benefit we will expect to see in year 2 and 3, the years after this, where we will make some investment in our capacities, in our structures and our platforms, which will really accelerate our growth and therefore also our margin gains opportunity. M&A will definitely be part of our focus areas in the future, but only if it gives us the right return for our shareholders. Frankly, we just won't cut a check for any opportunity which presents itself. It needs to make sense for us and it needs to be part of our integrated approach going forward. We believe that there will be a lot of consolidation in the market and Wynnstay really will be very focused on that. As we stand here today, we expect better results and better outcomes in this financial year than last year. I'm really optimistic and excited about the benefits Project Genesis will bring to the business, and therefore we expect much better outcomes and the ability to grow and scale our business in the future.